Greetings and welcome to Ag Finance. This is a segment 1 video for Unit 1, Acquiring and Organizing Management Information for Your Farm Business. We'll be covering a few slides here and kind of chunking these videos up into smaller segments, make them easier for you to listen to. But in this first unit, we will just kind of be giving you an overview of some of the content items and some of the key informational pieces in terms of farm records that we will be discussing in this unit. So let's get to our content. From an introductory perspective, the first couple questions that I have here is, posing to yourself just kind of for personal reflection is, why are records important in information management? Why is that so crucial whenever we talk about farm business management and specifically into ag finance? Well, first things first, you need to be able to understand where you're at as a farm business. Where are your finances currently sitting? What pieces of your information is profitable? Which pieces of your information are not profitable? At what point in time might you need to seek out loans for certain things? If you're going to seek a loan, how are you going to repay it back? Those things are really crucial in terms of making great business decisions and keeping yourself in good financial position. Next bullet point question there is, what purpose can records serve in farm business management? And they can really help you define what business decisions should and should not be made. It should be a guiding principle for almost every day-to-day approach to what you do on the farm. Of course, we do lots of things that we make decisions technically, whether it's applying a certain chemical or selecting a certain variety of seed, or making a mating decision on your beef or dairy cattle or swine or whatever, when to call the veterinarian. But from a financial health perspective, being able to have a sound set of records and then utilizing them and analyzing them for decision making is really crucial. So I ask a couple questions here, and these are for you to kind of think about, is what types of records do you keep on your farm? How are they kept? What tools do you use to keep those records? For example, I utilize My John Deere to keep a lot of my agronomic records for my operation at home, and in addition use Excel spreadsheet databasing in order to our Excel spreadsheets to do analysis on my financial conditions at home. That helps me guide decision making, whether it's budgeting, whether it's grain merchandising decisions and things of that nature. There's all kinds of tools out there that you could use, software packages and so on and so forth. And many of your, like I mentioned, My John Deere, just for that's what we use, or Ag Leader. Lots of those have pretty extensive accounting features in them that you could put all of your inventory and financial records in there and have that do an analysis for you. But those few questions are for you to kind of think about. And if you don't know the answers to them, might be a good time to ask and find out just how your farm business at home works a little bit. So what is the purpose? How are we going to use some of these records? Again, measure profit and assess the financial condition of your farm business. Again, much of our program is tied to developing that technical aspect of your knowledge base on agronomy or animal science or things of that nature. But there's an underlying current in our program about also developing that business acumen that is really critical in today's farm business climate. So how do you measure and assess the financial condition of your farm business? How do you pull data out that you can actually do an analysis that's going to be useful for you in decision making? When you approach a lender about a potential loan, whether it's for a piece of equipment or a new farm, what records do you need to assist you in obtaining those loans to be successful? You can measure the profitability of individual enterprises. We'll talk about enterprise budgeting later on in the semester, but it's really critical that you understand which pieces of your farm business are profitable and which ones are not. You can assist with the analysis of new investments, just kind of as I referred to a couple points ago. You really need to know where you're currently at financially. There are opportunities that will present themselves, whether it's a new investment for renting more ground, maybe building a new hog barn, potentially adding a different piece of equipment, remodeling a milking parlor, things of that nature. You need to have good, sound financial records so that you can really make a sound decision in terms of financially, is that smart for you to move forward in any of those new investments? And then finally, of course, you need great records in order to prepare your income taxes. And it's not the purpose of good financial records to avoid taxation. Certainly, if you've made money and have to pay tax, that's a good thing. That means you've been profitable. But certainly, we don't want to pay any more tax than necessary. Other records that you might want to think about in terms of putting into your financial planning is compliance and environmental things, um, establishing insurance needs and your insurance package, planning and valuing your estate, managing your inventory, really critical, oftentimes. Landlord or tenant expense division, you can kind of, if you're sharecropping or have an operating agreement with a landlord, how do you break out those expenses and be able to report to them accurately? Reporting to partners or shareholders. If you have maybe a corporation set up with your farm that maybe includes folks that are not technically living on the operation or work on it day to day, but you're required to report to them the financial condition, you need to be able to do that. And then marketing plans, specifically for those commodities, meat, milk, eggs, grain, that you need to be able to market. Also, we have to be able to measure profit and assess financial condition of the farm business. So we have to be able to prepare an income statement and a balance sheet. We're going to cover those two topics in pretty good detail here in just a couple of units and talk about how we utilize the balance sheet specifically, how we utilize the income statement, and what information those things report on, and what role do they play in financial analysis. Next, we need to provide data for the business analysis. We have to analyze profitability of the business. We can determine how sound the business is actually. What kind of risk do you have, and what kind of approach can you take? How aggressive maybe can you be? It may shed some light on past decisions and help make future decisions. Maybe you look at a past decision of planting a certain variety of corn, and you decide that was maybe not the best business decision. You maybe invested more than you should have, and therefore, the market didn't, and the outcome didn't really come out profitably. So you shift to a different approach to that. So there's all kinds of things that you can kind of look back and measure profitability and success based upon the type of records and analysis that you do. I mentioned assisting and obtaining loans. Many lenders are going to have a requirement for a detailed set of records, balance sheets, income statements, budgets, projections. There's some very detailed metrics that we'll get into again soon that are going to be requirements for obtaining loans. And your lender should work very closely with you in building that set of records, and then also analyzing them with you. That relationship with the lender is really going to be critical in your farm business operation or your agronomic business. So every time that you have effective records, it's going to really help you and enhance your chances of having full loan approval for the full amount requested, and also a loan package that financially makes sense for your farm business. When we look at individual enterprises, there's oftentimes several enterprises included on one farm or your ranch. So for example, and we're going to again get into this in much more detail later on, but if you have a farm business that milks cows, raises hay, grows corn, soybeans, and wheat, actually you have 4 or 5 enterprises going on in that operation. It's important to kind of take a look occasionally at which ones are profitable and which ones are not. How do you make adjustments to them? If you only lump them all together, you may not realize that wheat, for example, is really costing you a lot of money, and therefore maybe robbing profitability from the other 4 components of the operation. So what adjustments do you make? Doesn't necessarily mean you eliminate that enterprise, but maybe you need to make adjustments to it. But record systems should be designed so that they track that profitability enterprise by enterprise at times. Which one is the more profitable approach? And also you can do some forecasting into the next year, as you know, crop prices and input prices, or forecasting in terms of growing your herd maybe. What changes can you make to make an enterprise more profitable? So You can really sharpen your focus is one thing that I kind of like to say in these, in terms of redirecting assets to the appropriate places on your operation, and maybe may result in eliminating an underperforming enterprise. We talk about new investments, and we all know that new investments in today's agricultural community, whether it's building an addition to your feed mill, adding a new sprayer, whether it's on the farm or to your local cooperative, new land, those things are massive, massive investments. And if you don't understand or don't have a good financial backing, it's very difficult to know whether that new investment is going to be A, worth it, B, profitable, or C, if you can even afford it. So proper records analysis is really important at clearing up that picture of the potential return on your investment. We have to think about lifespan of a piece of equipment or a building, expected profitability, budget and repair costs, maybe necessary improvements or maintenance over time. All of those things need to be put into the projection when we talk about putting in new investments. If you buy a new piece of ground, is it going to need to be improved? Is there trees that need to be removed? Is there drainage that needs to be done? Are there buildings that need to be eliminated off of it if you look at a piece of ground as a new investment? So there's all kinds of things that financial analysis can help you in projecting the return on investment of something new that you add. Finally here, and we'll wrap up this short little introductory section in segment 1 and talk about preparing income tax records. The IRS requires these records for reporting of taxable incomes and expenses. You have to be able to produce those in order for your tax preparer or yourself to properly come up with the amount of tax that you may owe the government. So you can do this with really ineffective and poor business analysis. I've seen over the years many people who have receipts and shoeboxes and things written down just on pieces of paper, and you can come up with this, but a really detailed accounting system provides a lot of benefits because you can very clearly see additional deductions and exemptions because everything's categorized and itemized for you. You can better manage your taxable income. Again, I don't mean to suggest that you should avoid taxation in your farm business, but don't pay any more than the government actually requires you to. Over time, then you reduce the amount of income tax that you're totally going to pay. And of course, you need some protection in case of an audit. If you have a good, sound set of records, auditing will be no fun. There'll be lots of information that the IRS would ask for that if you cannot produce it successfully and itemized and categorized in the correct ways, they're going to look very far into your financial records, and it will be a great deal of work and headache and stress on you and your operation in order to complete that successfully. So, a good sound set of records will help you be prepared from an income tax perspective. We're going to wrap up here with segment 1 in unit 1 for this particular lecture. We'll be back with segment 2, which we'll get into some more specifics in terms of a chart of accounts and maybe approaches to an accounting system. Thanks for tuning into this video.